Good morning and welcome to today's pre-market video. Now, I hope all who are watching today's pre-market video also watched yesterday's one. If you have not, then do take a look at it, as I had covered Reliance Industries and Kotak Mahindra. The analysis worked perfect for day one, and I believe that analysis will work for you for the coming trading sessions very well. So once you finish this video, you can take a look at that and it will be beneficial to you. Now, in today's pre-market video, I'm going to take a look at the news which is affecting the Indian stock market. After that, I'm not going to take a look at the Nifty index. Rather, I'm going to take a look at HDFC Bank, and I'm going to take a look at State Bank of India. This is, I believe, both are important to follow right now. And so I'm going to take a look at what traders can do with them. Now, coming to the news front. Now, on the international front, the first news is naturally going to be that now for the next 1 to 2 days, the Indian market is not going to be taking cues from the US market. This is the US stock market. As of when I'm recording this the night before, the US stock market has an early close at 1 p.m. And so a lot of people who use the US market as a guide, they're going to be going blind now. I already believe you shouldn't use it that much because it affects maybe the first pre-open part, 9 o'clock to 9:07. After that, it's pretty much irrelevant. Then the second news which is going to affect basically the markets is the UK is going in for an election. And since the election is starting and one of the candidates is an Indian, so it is going to be heavily monitored by people here. And I believe on the emotional side, it will affect the market, which will give a bit of volatility, which will be much needed as we have been going in a range from too long. Because we've been going box range to box range, box range to box range. Now, the third news which has internationally come out is the ISM services PMI. Now, why is this data important? Now, on the weekly video, I had shared that there's a non-farm payrolls report coming out on Friday. Now, naturally, that's for the American market. But why everybody who watches it globally is that it affects what the Federal Reserve is going to do. So, if the report is basically, it can dictate whether the Fed will do a rate cut or they will not. And the ISM services PMI gives one of the first indications of what non-farm payrolls report is going to be like. Now, the ISM services PMI report for June has shown a contraction in the US services sector, with the index falling below 50 for the first time in 17 months. This was much weaker than most expected, and it also has caused the US dollar to weaken today. So, what does this mean? Basically, the US stock market rose because of the ISM services PMI report coming like this, as it gives a bigger chance of a rate cut being done sooner than expected. So this is a positive for the markets. Now, the other news which has come out is that the EAI's weekly petroleum report has come out, and it has shown a much larger than expected drop in crude oil inventories. This naturally, if you're watching the WTI and Brent crude prices as a trader, then you'll have seen they'll have gone up, but then they came down because heavy profit booking came in. So due to that, that is going to have an effect on the Indian market, but mainly on the sectors like paint and naturally like BPCL, those type of stocks of the oil sector, but not on the broader market. Now on the local front, the news, there's only one which is really going to basically affect our market. Is the RBI governor met with a lot of the bank CEOs, and main thing he was on about was intensifying efforts against mule accounts, basically mule accounts or accounts which are used for money laundering and tax evasion, and also enhancing customer awareness to curb digital frauds. Again, the governor did speak about the persisting gap between credit and deposit growth and liquidity risk management and trends in unsecured retail lending. So this is nothing new. It's what basically every time he keeps on talking about, and it's not something that will affect the market much as it's known. Now we come to the stocks. Now, the first stock I'm to be taking a look at is State Bank of India. Now, I've chosen to take a look at State Bank of India as I had covered it earlier. Now, when I covered State Bank of India earlier, I've put the resistance lines I shared earlier into blue, and the new resistance I've shared into red. And the support, I have not modified it, so I've kept it how it was before, black, and now black. Now, State Bank of India has exactly traded how I had predicted. This is when I had made the video viewer here, and I had said any rise to basically 863, which is my resistance, will get rejected, as that is a very strong quant resistance level. And look what happened. Rise 1 attempt, reject. Then it fell directly to the support which I gave between 817 and 825. As I said, we are going to form a box range here. And exactly that happened. We fell back to support. Again we attempted. 863 again rejected. Again we came back to the support. So now what do I expect for State Bank of India? Now for State Bank of India, I've added one more resistance level, 850. This is as right now all the Huey been done in the Bank Nifty and everything yesterday. A huge gap up in the Bank Nifty. It was all primarily due to HDFC Bank. If you look at the other banking charts, most of the banking charts did not perform. So if State Bank of India goes to 850, now what traders are going to have to watch is this trend catch indicator. This is, if you look at the trend catch indicator, when I covered it that time, I said it is sloping downwards, most likely going to go below zero, and that is what is going to cause us to form this range. Now that's exactly what happened. We went back below 0. Now we are trying to go and test 0 again. So if we break 0, then we will break 850, and we're going to go again and stop at 863. So if we break above 0, we are going to form a tighter box range between this zone here, which will try to take us to 880. However, if the trend catch indicator gets again rejected at 0 line, as I expect most likely it will, then we're going to rise to 850 and maybe even go to simple resistance and then come back to this support. And this, if it gets rejected here, then is when the bearish volume should start developing, and then I expect us to trade a bit here and then go to 790. So now the whole game is depending on that indicator, how it handles the 0 line. If it stays below 0, we're going to be shorting. If it goes above 0, then I'm not going to go long still, because there is not much of a move here. An option buy is not going to make anything from this in position. So this will be more of a C seller's market, basically selling calls above 863, for example. It will be more of a C seller's market than a basically C buyer market. Because option buying, you need speed and you need everything, because you do not know decay to start catching up with you. So that's my trading plan for State Bank of India. Now coming to HDFC Bank. Now HDFC Bank, I've gone to a lower time frame. This is, as if you see, HDFC Bank was trading in a box range. It had formed a big box range from here until here. Then all of a sudden it started forming, trying to break out the day before, and we can understand why that was, because this article was going to come out. Now I believe everybody who bought into HDFC Bank yesterday as an equity buyer is in for a big surprise, for only one reason. If everybody has put HDFC Bank's articles, you open any news site, CNBC, you open Money Control, you open investing.com, you open NDTV Profit, all have put HDFC Bank, weightage, everything is going to happen. Okay, it might happen, no doubt. But if you pay attention to the article, it is not a fact, it is basically a rumor. So I believe that yesterday's huge gap up in HDFC Bank was the smart money leaving the stock and the dumb money coming in. This is if you look at what most articles are saying, is that the latest shareholding pattern of HDFC Bank has shown that FII ownership in the bank is below 55%. And this is expected to boost the stock's weightage in MSCI index, leading to higher passive inflows. Now, is expected to increase. That's the main word most have forgotten. As it is an expectation and not a fact, what it means that yes, this rise is premature and it will have to come back down. Now the big question is how much of the smart money has managed to exit. If roughly 90% of the smart money has managed to exit, then this is the top right now. If not all of it has exited, then we'll have one up move more and then a drop. So that's how I see for HDFC Bank. So now how am I going to trade HDFC Bank? And before, in fact, I will get a question, why am I being so harsh on it? Because, as I said, this is a rumor. There is no factual change in MSCI index right now. It is a hope. It's like I put an article every Monday on investing.com. I can type an article on HDFC Bank with a happy rumor. And if it's picked up by, let's say, 10 other sites, it becomes a huge news. So that is exactly what has happened in this case. There's nothing, this news has nothing to do with HDFC Bank's earnings, HDFC Bank's growth, or anything, any fundamental change. So basically, people have decided to gap up the stock and value it based on some rumor of an index choice of weighing mechanism. Because it's not even confirmed if the MSCI guys are going to use this mechanism to weigh. So this is the smart money going in, getting out, and the dumb money coming in a very big way. So I expect all the people who have gone long here in the equity side, I'm saying, not in the FNO side. FNO side, I'm not buying it for long. They already decided to go in and out quickly. But that equity guys who have come in here are going to basically get slaughtered in days to come, and then they will say the stock market is a bad thing. Now, how will I trade HDFC Bank? As I said, if not all the money has gotten out, then we can expect us to go to, if we go to 170 and break it, then the resistance is 1796. If we break this, then we're going until 1820. However, if we get rejected at this resistance, then the main important support is 1764. And until we trade within this zone, 1764 to 1796, we're going to get V-shaped moves. However, the minute we break 1764, I expect us to have a fall to 1750. And due to where the trend catcher indicator is, it is still above zero. It's come sharply down, but it's above zero. At this point, we'll have tested zero, and so we'll get a small bounce and then a fall to 1730, and then a fall to 1690 to 1700 if that breaks. So my HDFC trading plan right now is CE sells above 1796, basically. CE sell this range in positional trading, and then if we break 1764, either keeps selling Cs and start selling more aggressively, going more in the money, CE sells, or basically in intraday, waiting for intraday of, let's say, or 1 to 2 days overnight, break 1764, go to short until 1750. This will be intraday because we will have a bounce back up. Break 1750, then it will be a longer drop to 1730. That breaks 1690 to 1700. So that is how I see HDFC Bank trading. As I believe today, I'm saying today as I record this the night before, a lot of suckers have been pulled in, and those guys are going to get, the equity buyers have come in here, are going to get a lot of slaps in the coming days, and then they will come online and social media and say the stock market is a very bad place. So that's it for today's video. Thank you for watching, and if you did like it, then hit that like button and also subscribe to the channel. Thanks.